Hey guys, let's talk about MyHealth Technologies. I covered the stock in one of my earlier videos, so if you haven't checked that out, you should definitely do. This is my favorite stock to hold long term. And so, big news today. Let's talk about the MyHealth Partners Inc. acquisition and what this means for the company's revenue and share price moving forward. So MyHealth Partners Inc., a lot of awards here, always good to see. They don't just give these out to any company, so you're looking at reputable names. Down here, we have some diagnostic services that they offer, and so the site looks pretty legit and clean so far. The company has over 40 locations and are the only independent diagnostic facility in Ontario. This gives them advantages over public health centers, things like shorter wait times, quicker turnaround, the higher standard of care. Well, I think this could be true because the public health sector is always busy and tends to rush things, so I would agree with this as well. And last, they have more than 15,000 healthcare providers referring their patients to their center. And so that's a quick introduction of the company that Well acquired, and so let's dig into the numbers. So some details about the deal. Well acquired MyHealth Partners Inc. for $82 million in cash, $94.3 million in shares at $9.80 per share, $30 million in convertible promissory notes, and a 4-year performance-based earnout up to an additional $60 million in cash. The company is growing top-line revenue over 40% and EBITDA at a compounded annual growth rate. The company's done over 25 acquisitions in the past 8 years and positions well to be the largest owner-operator of outpatient medical clinics in Canada with over 74 combined clinics. And last, this acquisition is expected to generate pro forma revenues of around $100 million with EBITDA margins of around 20% in 2021. And this brings Well's revenue run rate past the $400 million mark and over $100 million in EBITDA. Okay, so we are back on the spreadsheet to give an update on Well. I added some notes on the side for me to go over, and this just tells us what's changed since and what started off on. The original $220 million in revenue that I projected for 2021 will now be $246 million to account for MyHealth Partners Inc. and additional organic growth. The company will now do over $400 million in revenue in 2022. I also increased the guidance in 2025 from 35% top-line revenue growth to 40%, and something similar with 26 and 27. I increased that to 35% from 30% to account for synergies and acquisitions, growth, and additional acquisitions because the original $1.7 billion in revenue that I had for them I felt was a little too low. And so I also accounted for 5% dilution through an increase in the number of shares due to the deal. The time-based earnout has also increased quite a bit. I adjusted this for the deal and also felt like I didn't include enough earlier. And now the EBIT you see on the bottom later will be a little too high. I had to omit some one-time unusual items that were completely unpredictable, so they're always situational and I left that out. And last, I expect the company to trade at a higher multiple in line with their US peers once they uplist on NASDAQ. Okay, so the updated numbers here. Because the company will be trading on the NASDAQ, I want us to focus on everything 20x and above. So I have a 12-month price target for Well of $11.21 to $14. And this is quite a step up from my original conservative estimate of around $9.80. This time around, I have the company at $16.55 to $20.69 by 2023. And of course, the share price over the years won't be following this projection hand in hand due to market risks and whatnot. These are all fairly reasonable assumptions, and I have Well trading at a share price of $40 by 2027. If you bought in the stock at $8, that is a 5x from here. This projection is not too conservative and not too optimistic either. It's just right in the middle, which I think is good for us to get a look at how the company will do if they continue to execute. And some closing remarks. I think this acquisition just continues to show us on how on the ball this company is. All these equity financing deals done at a premium is just another signal to me that the share price of this company is going to be leaps and bounds higher in the future. because it's not just us retail investors, but the management along with their strategic partners all believing in something bigger and better down the line. And so if you enjoyed this video, guys, hit that thumbs up and support the channel to get updates along with some of my other research and analysis. And I'll see you next time where I talk about a special Chinese mega cap.